So I want to welcome everybody to this evening's Let's Talk About It discussion, when we're going to be talking about investment strategies for Black economic freedom. But first, as always, I want to go over the disclaimer. And so the information provided is strictly for educational purposes only. I always strongly encourage you to consult with a licensed financial advisor, attorneys, or tax professionals before making any significant financial decisions or investments. And though I do have decades worth of experience, I am not licensed or registered with any regulatory authority. So now that that is out of the way, we will jump directly into tonight's discussion, investment strategies for Black economic power. Where should we be putting our money? And this is going to be an interactive discussion. The whole purpose of this discussion is to look at how we are shaping our economic destiny, we as Black folks. So it's more than just wealth creation. It's about self-determination, economic survival, and practicing cooperative group economics, where it's not just about one person maximizing their profit, but it's about maximizing the benefit of the community that we belong to. And so I'm going to go over 7 different investment strategies that I believe we as Black folks should be focusing on. Again, this is not direct investment advice for any specific person. This is strictly my opinion based on my years of experience, my research on the topic, and how I feel that we as the Black community should be moving forward. And so the first strategy is digital assets, such as Bitcoin. Now, I've talked about this on several occasions on Let's Talk About It. We've even gone as far as creating a private Bitcoin treasury company, because Bitcoin has been the fastest appreciating asset for the last decade. It is forecast to continue to be the fastest appreciating asset for the next 10 to 20 years. It's looked at right now as a store of value. It's considered a real asset like gold. They call it digital gold. And it's priced in dollars. And so what we've seen is a huge adoption by institutions ever since BlackRock came out with its Bitcoin ETF, which allows institutional money to flow into Bitcoin. And in just the last year, we've seen the price go from 60,000 to where it's hovering now between $115,000 and $120,000. And there are some who may feel that it's too late to get into Bitcoin. We should have gotten into Bitcoin in 2017, right? When it was, between $7,000 to $20,000. And what I say is that we are at the beginning of this S curve for Bitcoin, where we're going to see a hyperinflation in its price. In fact, it is forecast that the price of Bitcoin is going to go to $1 million per coin within the next 3 to 5 years. And there's various studies and that support that position. A lot of it has to do with the purchasing power of the dollar. And when we look at this current administration and its push for digital assets, its push for Bitcoin, its push for stable coins, the Unity Act, which was recently passed, which clearly defined a stable coin as a digital asset that is backed 1-to-1 with dollars, either actual dollars or dollar equivalents, aka T-bills. And so it is forecast that the stablecoin market in and of itself is going to purchase trillions of dollars of T-bills, which will help facilitate the United States to continue to print more money because it's got an automatic buyer in stable coins. But all that will do is continue to diminish the purchasing power of the dollar. And then those real assets that are priced in dollars will continue to go up in value. Bitcoin is one of those real assets. And so between the stable coin, between the institutional money looking to trade its fiat dollars for real assets, I'm still a believer that Bitcoin needs to be a cornerstone investment in Black folks' portfolios. So that's Bitcoin. And then we've talked about stable coins. And there are other asset-backed coins. We've heard on this discussion over the last couple of weeks, other Black founders that have created asset-backed coins, either backed by gold or backed by silver. And so I believe that we as the Black community need to heavily invest in digital assets so that we don't get left behind. And so I will pause there and take any comments or questions from the audience regarding digital assets. Anybody have any opinions about digital assets? You can just either raise your hand or you can unmute yourself.
Hey, Michael, Stefan, when you say digital assets, what other sort of categories are you going to after this? Are there other type of asset classes that you're about to discuss?
So digital assets um, are the is the main thing I'm going to discuss. Let me see. Yeah, as far as digital assets go, um, it's all encompassing of the blockchain based assets. So even though I've focused on Bitcoin and on stable coins or other asset backed coins, um, there are a lot of other um, investment strategies that can be used with digital assets. So, for example, there's the staking of coins like ETH or Solana, where you purchase the coin, you hold on to it, you stake it, and then you earn staking rewards. In fact, we're rolling out a new investment opportunity. It's called a staking company, where we have a company that's doing just that. It's staking in these altcoins that are appreciating, that we can also earn additional rewards for, and we're using different strategies to hedge our risk. And so that will be one specific investment opportunity that we're getting ready to roll out. Does that answer your question, Stefan?
Yeah, it does. And basically, I was asking it because part of the work that I'm involved in, even prior to AI, was digital assets by way of it's sort of investing in companies that are looking for real digital real estate. And for instance, I'm just looking at the report of digital assets by digital real estate that sold just this week, and it's pretty significant prices. I'm bringing it up because sometimes I'll go to these conferences and our folks aren't there. I'm sitting there watching people put up a paddle to buy the word Latino.org, thousands of dollars, and they're just bidding on it. And all it is some letters. The other day, a friend sold 4 letters. It was $1 million. And these are a different type of digital assets. It's not like, oh, I'm going to go to GoDaddy and sort of play the lottery and just put something together. People are investing in words, or phrases. And man, my heart burns just to see our community understand how powerful these things can be. And so when I think partly of digital assets, I think when it comes to real estate, staking a claim on something, a place on the internet that someone can build on. And, again, back in the day, they would think, oh, like buying a domain, and that's part of it. But it's in a heyday right now. It has a resurrection because so many people are able to use AI and put a site up. I'm doing sites several in a day right now using AI. So that's it. I just wanted to drop that part of investing literally in letters as an investment more than I'm going to kind of just go and buy a $10 name. Um, it's a different way of going about it than that.
And thank you for that contribution. One of the things that I think we need to be very cognizant of is being very strategic in the strategies that we use, right? So I've got an hour. I'm gonna go over seven um, um, uh, asset classes and strategies combined to give people an idea of where I believe we as a Black community should be putting our money, given all of the different um, asset classes. So digital assets is the first one. Um, Bitcoin is the cornerstone for me for digital assets. There are a bunch of other different strategies within the digital asset class, as Stefan has pointed out. And so let's continue on to the next one, uh, which is real estate. But this is real estate reimagined, um, focusing on land and resource control. Um, so this is, beyond just traditional property ownership. This is about strategically owning and controlling real estate. My company focuses on the inner city of Detroit. We believe that there's a lot of opportunity there for us to rebuild um, a Black community, to invest in it before it becomes gentrified, and to create an economic base out of Detroit. And so there's several ways that we're looking at doing that. And so community land trust is one strategy, or just land trust in general. The tokenization and the fractionalization of assets. So through the closed private investment network, we offer that now, where you can own a piece of an income producing property for as little as $500. And so though traditionally it may take tens and hundreds of thousands of dollars in order to purchase one piece of real estate, through the tokenization and the fractionalization of real estate, we allow people to pool their money together in order to purchase and own real estate. And we've got several of our members who are already partaking in that. And then there's agricultural investments. We heard about that in our session about investing in raw land. We are more focused on agricultural investments in the urban setting through hydroponic farming, which brings technology to farming. And so I will pause here again to get people's input, and if they have any questions or comments when it comes to real estate investing, and what strategies do they have or have they used that they see that is working. Leroy, go ahead. You can unmute yourself.
Yes, would you mind elaborating a little bit more on the agricultural investments and how do you see it? Is it the fractionalization of ownership? How do you see that working?
Sure. So let me take your hand down. So we are all about doing fractionalization ownership, right? That's what the closed private investment network is built on, is practicing cooperative group economics, pooling money together in order to go and invest in those investment opportunities that we may not as individuals be eligible for, or we may not as individuals be able to afford. And so there's different agricultural investments, right? Buying a farm and getting into the farming business the traditional way. My strategy is hydroponic farming. And so what that is, that's farming without soil. That's farming in a controlled environment, using mainly lighting and using 95% less water than traditional farming. So in a 53-foot tractor trailer, you can have the same output as 1 acre of farmland. And so imagine putting those trailers or having a commercial building in an inner city and growing fresh vegetables, fresh food, and shortening the time from field to table. And so the technology has vastly improved since I bought my hydroponic device to grow vegetables several years ago. But I believe that that is the future, especially in urban areas. And again, it's about applying technology, but also being the owners of production. All of this is about owning the means of production. So I hope I answered your question when it came to agricultural investments. Jamal, I think I saw you unmute yourself.
Hey man, what's going on, man? Yeah, good stuff. Land is buzzing right now. But I think one thing that people need to really get is learning the infrastructure before you buy in, whether it's agricultural or commercial or raw. You should really have a strategy for what you want to do. We got some things going down in Central Texas from Austin to Gonzales near the Central Pipeline, the water pipeline down there. We got like a 7 to 10 year projective on boomtown that's coming in certain areas as you move towards Gonzales, Lockhart, Texas, Luling, Texas. So it was good to get in the space. But you know, when you're in the land, study the infrastructure. You know, the town next door theory also. If you're buying some raw stuff, try to get it near somewhere where they're developing, maybe 15, 25 miles away, so you can get some of that steam. Should it get more populated? Should businesses move in there? Things of that nature. But good stuff, man. But yeah, raw land's a good place. You know, if you can get good commercial stuff, also look at your your tax liens, stuff like that. You can get a good piece of land there. Do your due diligence. Make sure everything is straight. You know, your topography, all your stuff that you need. You know, your minerals, all your stuff when you're moving it on this deal. But now's the time. So good stuff, man.
Thank you. Anybody else have any questions or any comments when it comes to real estate investment strategies? If not,
This
we'll
is
go.
Tim. I have
Oh,
I
yeah.
have a comment.
ahead,
You're
Tim.
doing a good job of pulling together different types of real estate. Now, I'm not looking at the real estate. I'm looking at raising money and making it so that people can get in and get out easily in the market. How about pulling all this stuff together, putting it together as a REIT, real estate investment trust, take it public, so they can go ahead and buy and sell shares in the market, and you grow. I mean, that's the best. That's one of the best ways when you accumulate enough real estate. And it doesn't have to be doesn't have to be like you bought a lot of it, but you can put it together in a REIT. And there are a lot of attorneys out here, black attorneys who can help you, and accountants who can help put all that together pretty simply, and even maybe at no cost. But that's one of the things I think about. And I'm not really a real estate investor myself. It's just not my interest, even though once upon a time I was part of a group that we did this with. We did luxury hotels. We did luxury hotels around the world. So I did all that. It was back in the last century. So we don't. That's a long time ago. I'm an old guy. But a REIT or a real estate investment trust. Just think about it as you pull all these different pieces together and try to roll it. You can also raise money to be able to go out and buy more things with it. So that's my 2 cents.
Well, thank you. And the closed private investment network platform is an investment platform. And through the tokenization and fractionalization of assets, whether it's real estate or whether it's um, private debt or private equity, we're going to grow our platform where within the platform, you'll be able to buy, sell, and trade your fractions of the things that you own. And so taking the same concept as a REIT, right? Partial fractional ownership, and then being able to buy and sell, but within this closed private investment network. And the main reason for that is to recycle the black dollar, right? We want to focus on having, excuse me, we want to focus on investing and reinvesting with us and among us. And so, one of the goals is to create a community, grow that community, educate the community when it comes to the financial aspects of investments and the financial risk, and then to offer multiple different investment opportunities. And so that's what the closed private investment network seeks to be, is that platform where people come and invest. So let's move on to the next strategy, which is tech equity and innovation. So AI is all the rage right now, right? We hear about the Magnificent Seven. An interesting fact is that, how can I put this? The AI capital expenditure for the first half of the calendar year had a bigger economic impact on GDP than all of consumer spending had. And so we're talking about the capital expenditure on AI from Alphabet, from Meta, from Microsoft, from um, the Magnificent Seven in AI. AI is what is driving this economy right now. And so it would be foolish not to invest from an equity perspective into AI companies. But now the question is, what AI companies, what part of the industry, right? Do you just invest in the Magnificent Seven? Or do you invest in companies that are benefiting from artificial intelligence? So we know that AI needs chips. So NVIDIA, largest company by market cap because of AI, supplies the chips. But then we also have companies that has the hardware that the chips go into, and the hardware is put into data centers. And so there's the building of the data centers. Those data centers are energy hungry. And so it has a huge impact on the energy industry. And so, these are what are called the rails of the AI industry. And so there are, again, different strategies within the artificial intelligence investment strategy. There's also fintech. And so we saw with the passing of the Genius Act, the legal definition of stable coins. We saw the company Circle go public a few weeks before that Genius Act was passed, and it's tripled in value since its IPO, because stable coins are going to be the backbone of the financial system. There's a conversion that's happening. And so that is an investment strategy, is looking at those companies that are involved in fintech and are providing the rails for the new financial industry. And then there's Web3. And, we've heard about Web3 now for several years. Facebook changed its name to Meta because of it, and it has not taken off at the rate that it was expected, but it's coming. It's all about blockchain. Crypto is the first and major use case. Tokenization of real world assets is going to be the next major use case, but we are still just at the tip of the iceberg when it comes to Web3. And so tech equity and innovation, we need to be investing in those companies. And so I'll take a break here to for any questions or any comments regarding tech equity. Anyone?
So
All
this
right.
is Tim again.
Yeah, Tim.
I'm going to give a commercial. My company is Artificial Intelligence Augmented Reality Solutions, and we are the largest company in terms of imagery for visual language models. All AI, primarily that we see, is based upon large language models, words. But we have the imagery. We have imagery that's needed for the field. That's more than what Shutterstock or Getty has. So for the particular field, and we own these. So we're trying to make a stand with this. We're taking it public, and so we can, because going public. Let me be honest with you guys. Going public is how you make some money. That's how it's done. At the end of the day, all the big companies, you talk about the Magnificent Seven, they're all public. They're not private. But ours is private only for right now for a short time. But it is, we have a independent third party valuation on our asset base and what it is, and it was over $5.23 billion. So that makes us one of the largest black owned companies in the country. And so now we have to do something to make it liquid. And that's why we're starting to do Sarai, where we're doing licensing. We just started going out licensing to Microsoft, Meta, and Google. These are our first three that we jumped at. We've had meetings with Microsoft, quite a heavy meetings with Microsoft. Their AI department is headed by Mustafa Suleiman. So, you know, you can catch from the name that it just ain't a nobody. He's somebody can understand. So, in this field, it's very interesting. This field, you have to find a unique way to get into the AI spot, and we also are into the augmented reality piece as well. So being close to universities, the technical side of universities, getting close to smart people who pay attention to this. I'm not that smart guy. I didn't do all this stuff. My background is law and finance, so that's what I am. So, but we got involved. We took over some things, and I'm a takeover artist. I believe in taking over other companies that are losing, and you can take something out of those companies, their technologies, and so forth. So we've done that, and that's how we acquired what we have. So anyway, we've done it, and we're going to see what happens with it. I encourage everybody to look at the technologies out there that are related to AI and to augmented reality, and find some kind of way to jump on the game, because it is the future. No matter what we think, it's going to turn everything upside down, and it's doing it already in that. So how you do that? I like the public markets, because in the public markets, everything is disclosed. If it's not disclosed in the company and they're doing it anyway, people go to jail. So everything's disclosed in a public company. And so that's why I prefer those. And you can take a big chunk of them. So anyway, if you ever want to do it, you guys can hook up with me. I'll show you some things about how we were able to enhance our asset value without buying things. And let me tell you, like I said, it's $5.28 billion, and no one spent $5 billion. So I'll show you that secret one time of how you can build your own asset base up based upon how you do your valuations and with a third parties. So anyway, that'll be maybe another time. But please take a look at augmented reality as well. It's very important. Thank you.
Yeah, and Timothy, if you can put your contact information in the chat in case anyone wants to get in contact with you.
Okay, will do. Thank you.
So any other comments or questions on tech equity?
Definitely right on that, man. And me, I'm on the visual graphic part of it. You know, I do a lot of my own content, my own music, my own comics. You know, I do all my own imagery. You know, and that ties into blockchain and also Web3 technology, because that is all my own IP. So that's all my own intellectual property, which I can market and charge whatever I want for it. But he's not. He's telling the truth in the space for me. I was doing it for a while, like with refix technology and a lot of other stuff. And once I got into the AI stuff so far as the video stuff, the coding came in. But now I'm connected to a lot bigger coders that make my stuff better, and they do it for nothing. So we got a small one. Okay, let's put it this way: for four 45-second videos, I made $1,200. So that's the market, and you can charge a lot more when you have the technology for it, which we do. But
Jamal, I think you froze. He was dropping gems. Jamal, get back with us. And in the meantime, I'm going to go to the next category, which is lending over borrowing. So this is where we shift roles. So right now, the Black community is the largest consumer class in the United States. We spend over $1.5 trillion of spending power per year, and less than 2% is spent with other Black businesses. And so one of the CPIN's focus is to rechannel that spending among Black businesses, but also to teach people how to be the lender rather than the borrower. And this again goes back to the cooperative group economics. It goes back to the fractionalization and the tokenization of investment opportunities. And so some of the things that we will be offering are community bonds, where we'll be raising money in order to fund community-driven projects and businesses. Private debt. We have a couple of investment opportunities right now that are private debt. One is private debt in the early stage, private company. And then the other is private debt in a real estate business trust that has a real estate portfolio. And then there's peer-to-peer lending, right? So we all know in the hood, they have these money lending stores that charge outrageous amounts as far as interest goes for the unbanked to be able to borrow money. Payday loan companies charging 300% APYs. Through technology such as blockchain, we can establish peer-to-peer lending. And so this is, again, a strategy that we as the Black community need to get focused on, is becoming the lender rather than the borrower. And I just realized I wasn't sharing my screen. I apologize for that. But this is the screen: lending over borrowing, community bonds, private debt, peer-to-peer lending. Again, us going from the borrower to the lender. So with that, anyone have any questions about that shift, or have any experience in being the lender? Lending with what security is a very good question. And so our lending system right now in the United States is mainly based on a credit score, right? And it negatively impacts the Black community more than any other community. And when it comes to peer-to-peer, there are different collateral that we can consider. And so especially one of the and we don't necessarily, let me get my words together. So one of the best strategies that rich white folks use is to own appreciating assets, never sell those assets, and then to borrow against those assets. And so we need to teach that. And so we need to teach our community to invest, even on a fractional basis, on income producing assets, appreciating assets, and then to be able, and don't sell those assets, but then to use those assets as collateral to borrow against them. And so it then keeps the whole mechanism in-house among the community, because you're now lending to people that are part of the community. You're lending to people who have proven that they are able to acquire assets. And it doesn't need to be a lot, but we as a community, we have to change our focus. We have to start acquiring these income producing assets, these real assets, and then we need to leverage them and use them as collateral for borrowing, and then using that borrowed money to invest again and to grow our asset base. So peer-to-peer, my company prides itself in being risk managers. And so we develop low risk, high return investment opportunities. And so when it comes time to rolling out that peer-to-peer system, we will have a unique risk managed opportunity that benefits all involved, because we practice cooperative group economics. And it's not about charging 300% to someone who can't afford it, and you're playing the odds that you're going to have a high percentage that default, but you're going to make up on the people who defaulted by raking in all this money from everybody else. That's not the type of game that we play. So any other questions or comments regarding I just don't want to have fire, so I'm going to keep the funds. So yes, you are correct that income definitely plays a role in this. This is the whole reason why we have the payday loan companies, right? Because they're using your income as collateral. They're just charging an astronomical amount. And so there are different risk mitigation strategies that we can implement that will allow peer-to-peer lending. And this leads me to the next strategy, which is investing in Black businesses. So $1.5 trillion worth of spending money, less than 2% is spent among Black businesses. We are the only culture that allows other cultures to set up shop within our communities, to where we spend money with them. They then take our money out of the community back to their community where it recycles. And so it's a fundamental mind shift that needs to take place. Part of that is based on education. And so that's one of the things that the CPIN does, is educating our community on why they should spend money with Black businesses, why they should invest in Black businesses. Now, at the same time, we need to make sure that our Black businesses are run well. And so this is where the CPIN acts almost like an angel network in which we find Black businesses that are aligned with our mission of rebuilding the Black community, but that also have solid business models. And we help develop their business models to make sure that they overestimate expenses, underestimate sales and revenue, but still have a positive cash flow projection within a 2-year period, that they are able to scale at a significant rate, given adequate resources. Those are the type of Black businesses that we're looking for. We're looking for those that spit out cash flow, because cash flow is the engine for scaling, and cash flow is the engine for having money in order to invest in new ventures that are able to scale. And so it's a total shift in helping Black businesses grow, help them to generate cash flow so that cash flow can be reinvested, whether it's within the same company and continuing to grow it, or it's in other Black businesses. But it's all about being strategic. So, questions and comments when it comes to investing in Black businesses?
This is Joseph Jones, and I have a question comment. I just recently read a news article about how the Trump administration has basically declared war on the FICO system, and that they are moving to an Advantage 4.0 system as opposed to what they're using now, FICO scores, because basically FICO has a monopoly on the credit reporting business, and that they're trying to move to what they call the Advantage 4.0 system, that requires only reports from 2 of 3 credit rating systems as opposed to all 3 of them like FICO does right now. I don't know if anybody here has heard anything about that, but if you have, can you kind of go into more detail about how all that works?
Yeah, so I have not heard of that, but I do know, especially in the age of big data, there are new credit scoring models that are coming out. So, and it's creating new industries. You know, the buy now, pay later industry, which is has its own internal type of credit scoring mechanism. And so as there is more data available and not hoarded by the 3 big reporting agencies, I think that you're going to see new type of risk-based lending and credit that's out there.
Well, according to the report, this Advantage 4.0 that the Trump administration wants to move to, it will make it easier for people to borrow money. And it will basically kind of make the FICO system. Right now, they run a monopoly on credit reporting, and they're going to actually kind of break that monopoly up. It's like a trust. I guess they're looking into it right now, and eventually, here in the next year or less, they want to move over to this new scoring system, which is called Advantage 4.0. So I was just wondering if anybody else had heard anything about that right at this point.
Yeah. Like I said, I haven't heard about it. Has anybody else heard about it? If so, unmute yourself.
Okay, that's a lot of crickets. But okay, if you would like to know more about it, I suppose the best way to start is to search for the Advantage 4.0 credit reporting system so we can bone up on that. That's something that we're probably going to need to know about in the next year or two, especially if we're talking about lending. I mean, borrowing, I guess it's important as well, but if you're talking about lending, that will definitely be something that we'll need to know about.
Yeah, and in fact, if you can put that in the chat so that we can record it for the meeting, and then I'll look into that later on this week. Thanks. And the next area is public markets with a purpose. And so we heard Timothy talking about going public, and that's how companies really make money, is in the public market. And so yes, you should definitely have part of your portfolio invested in public stocks. But the question is, what kind of stocks? And for the Black community as a whole, we need to be throwing our weight around, and so we've seen what happens when we come together and we apply economic pressure. We did that to Target by not shopping there, and we saw their foot traffic decrease, their sales decrease, and their stock price take a hit. And so we need to be strategic when it comes to the type of stocks that we invest in. And so, you can invest in appreciating stocks, which the whole goal is to buy low, sell high. We've already talked about the Magnificent Seven and other tech stocks. Or you can buy stocks that are dividend paying stocks, right? You're not really looking for price appreciation. You're looking for the dividend payments, and you can imply covered call strategies. It's kind of like renting out your stock, but when done properly, you can earn 1% to 2% per month, and because selling call options, because 90% of call options expire worthless. And so that's a strategy that helps balance the risk associated with some of the other investment strategies that we've talked about. And if we do it as a community, if we do it through special purpose vehicles that are legal entities specifically put together to pool money together in order to invest in a specific investment, that SPV, think of it like a mini fund. It can do the ethical screening, and it can make sure that the companies that it invests in are value aligned. And so public markets with a purpose. And I listened to EYL, Earn Your Leisure, and they talk about the company, I believe it's Palatine. Is that the defense company?
Palantir,
Palantir.
which is
Yes.
which is actually headed by a brother,
Oh, really?
Alex Karp. He's one of the PayPal mafia.
But even though from a stock perspective, it's done great, from an ethical perspective, one of the brothers says he wouldn't or won't invest in it just from an ethical perspective. And so, we all have to, decide where that line is that we draw between investing in something because it's profitable versus not investing because of what it stands for. And so, any questions, comments regarding investing in public companies? See a lot of comments.
Well, I've been doing public companies since 1988, actually, and in all kinds of ways. In terms of one time heading a SEC registered investment advisory firm running $3.2 billion. So this is my meat. I eat this stuff every day. Okay, so I'll just tell you that. You have to look at a lot of things when you look at public companies. But here's something that's important for our people. We, of the top 1,000 defined contribution retirement plans, earmarked for the retirement of Black folks is over $1.4 billion. That's our money. We have the right to say what happens with that money. And yet, if you take all the registered investment advisors that are Black, put them all together and add a few $1 billion there, yeah, it may come up to maybe something like $30 billion, but that's not $1.4 trillion. Now, that $1.4 trillion is your money. That's the money that you work for, and you're sitting up there, and your 401k and your wherever you have it. Anyway, it's your defined contribution plan that's there, and that money you can tell the investment advisor where you want your money to go, right? Because that investment advisor is going to be somebody white, and he's not going to be looking like you, and he's going to be actually investing in what? In those companies that don't look like us. So you have to pay attention to your retirement money that you work for and who's running that money, and make sure what they're making that investment in. And so that's a critical element that we can just take and think about that. If we controlled our own money, our $1.4 trillion, and told those people where we want that money to go, we don't need no government money. We don't need any hands out from any banks. We don't need anybody to do anything. This is a true do for self with your own money that you work for. I'm really passionate about this because I've looked at it for many, many years. And this is the one thing that nobody knows to focus on, maybe, is that this is our money. You don't have to worry about it. This is a school teacher's money. You taught at school all every time. My wife is a college teacher, right? She didn't know what's in her. They gave her, oh yeah, you got these mutual funds. She didn't know what was in the mutual funds. We had to talk about it. I said, tell them people at the mutual funds what you want to do with that money, and she can do that. So I'm encouraging you all to spread the word. We have a whole lot of money out there that's ours. No, we didn't beg for it. We work for it. All of it is ours. And so you can go out there and demand what you want to do with your money that somebody else is running for you in your defined contribution plan. That's it.
Yeah, and it's interesting that you said that because President Trump just signed an executive order allowing 401ks to invest in alternative investments. And that's what we've been talking about. Crypto, real estate, uh, private debt, private equity, all falls under the alternative investment uh, class of investments. And so unity, Brandon puts, is what we're missing. And that's the whole purpose behind the closed private investment network is we're built on three pillars: community of like-minded people, education, and finances so that they can understand risk and have a higher risk tolerance, and then investment opportunities, curating low risk, high return investment opportunities, all in a closed private investment network. And so let me jump to the last asset class and strategy, and that's global investments, specifically within the diaspora. And we had a discussion a few weeks ago about investing in Africa and what are the things that you need to take into consideration. But there are huge, huge opportunities in Africa, in the Caribbean. And so we will be developing investment opportunities that allow a person to invest in the diaspora. Well, one of the type of products that we're developing are diaspora bonds. And so this will be debt-based. And just to give you an idea of the type of interest rates that the African banks are charging African companies is 30 to 40% per year. And so if we take the funds that we have here and we strategically allocate them throughout the diaspora in a combination of debt and equity, it's a win-win-win situation for everybody involved. And technology really allows us to do that. It allows us to tokenize the debt, to fractionalize the debt, and to instantly send funds through the blockchain, and to be able to record data on the blockchain. So there are huge opportunities. And so a global investment, specifically in Africa or the Caribbean, I believe needs to be also part of your investment strategy. Any comments on investing in the diaspora or any questions? So not hearing any, and we are a little bit over time. We're at the very last slide, which is what are the next steps? And so the strategies outlined today are actionable. They are actionable pathways to building collective Black economic power. But your engagement is critical for our success. So I recommend that everyone join the CPIN community, and I'll put the link in the chat. Continue to attend these type of discussions. Since these are the public discussions, we don't get into the details of the investment opportunities. But if you're a member, and when we have member-only discussions, we get into the nitty-gritty. We get into the numbers of the investment opportunities. When you're a member, you get to evaluate the investment opportunities. You get to look at the risk profiles. You get to look at the private placement memorandums. You get to look at all of the details. And the best thing is that you can then participate in opportunities if you're an accredited or a sophisticated investor. Sophisticated investor is defined by the SEC as someone who understands through education or experience the risk associated with the investment. And we have a knowledge center that helps you become educated so that you can be classified as a sophisticated investor if you are not already a sophisticated investor. And so let me put in the chat the link to the CPIN network. Let me grab it. But while I am doing that, are there any final words, any final questions, or any final comments? Did you guys find this helpful at all? Leroy.
Yeah,
This was very, very helpful. And now I see the full dimension of CPIN, BNIC, in terms of offering, in terms of community education and investing as far as the three pillars are concerned. As far as building our Black community globally. So this is wonderful, but I see how it's all coming together, and thank you for the suggestion. I was able to take some additional courses under CPIN this past week, so it was very, very helpful.
Thank you, Leroy. Well, are there any other questions or comments before we end this evening? Hearing none, I want to thank everybody for taking time out of your busy Sunday evening. You didn't have to be here, but you chose to participate in this discussion. I hope that you found it helpful. And there is one thing I do want to put in the chat as far as a link is I will put a link to the presentation so that you can download it as a PDF. I hope that you enjoyed this. We're here every Sunday, 5 p.m. on the West Coast, 8 p.m. on the East Coast. Let's talk about it, where we have a different topic each week, and we discuss about things that affect the Black community economically. With that, stay blessed and stay safe.